Great. I've prepared some questions.
Yeah.
But before we dive into that, let's have a brief introduction. So, Jack, who are you and what is it that you do?
Well, I'm the CEO and founder of this lovely company. And thank you so much for being here. And Rasmus, thank you very much for the kind introduction. It was much appreciated. I come from a background. How long do I have now for this intro?
5 minutes.
Okay, good. So it was 1990, and no, for the past 5 years or so, I have been working with blockchains and cryptocurrencies in different aspects. I shown an interest for it back in 2013, where I don't know why, but I bought a few Bitcoin, and suddenly it went from $30 to, well, whatever the first peak was. And I got super excited, of course, but it wasn't so much for the monetary value, because I actually still just have those 2 Bitcoin. But I thought this was really, really cool because I started looking into it and trying to understand what it was. Once I graduated school at that point, I started working directly with a company that became Coinify. So I followed the Danish company Coinify from, I was day one, and I was very proud to say the 5th employee there. The last 2 years of my employment over there, I was they created or they established an innovation lab. There basically it was me and a few coders, and we were kind of allowed to prototype and build conceptualizations of products that were not necessarily related to the core business. I was always quite creative, and initially started off doing marketing and sales for the business, and that's where I got the nickname Bitcoin Jack. I said to my boss, if you pay me extra salary, I'll live 1 month only on Bitcoin. So I said I need extra money because I can only pay in restaurants and stuff. I can't do grocery shopping. So we made a deal, and I survived 1 month only on Bitcoin, and this was covered by some media that branded it Bitcoin Jack's journey or whatever. But the last 2 years as head of innovation, I really built stuff with the technology. So we tried building a wallet in a solar panel so you can donate electricity and turn on a computer on the other side of the world. We built micropayment systems together with Nets, and I saw that they're continuing that actually with Tech Savvy Media now. We looked on supply chains for tracking music, for example, or royalties for Sony Music, and a lot of cool, interesting concepts. But the common denominator of all of them was that you needed a form of cryptocurrency to engage with these systems. So we in Denmark, we use digital krona on mobile pay, but I can't send 10 krona to a solar panel in Kenya. I can send Bitcoin or Bitcoin Cash or Dash because these are all programmable money. So I left Coinify. It was a gradual process, continued as a consultant, and then started ARYZE, which aims to make analog money more digital. We want to create a range of stable coins, so a range of cryptocurrencies with an underlying fiat value. So e-krona, e-dollars, e-euro, fully electronic digital cash. I think my 5 minutes up.
Yeah.
Yeah?
Makes sense. Ville, who are you?
Yeah, good. So good morning, everybody. Good to be here. It's always fun to be in the fintech scene every now and then. My background, so name first, Ville Sointu. I'm from Finland, as you can hear from my accent. And but I've been around the world for a bit. I've been working in fintech for 15 years now. So basically fintech before fintech was fintech. And before that I was working in telecoms for a while. But over my 15 years of fintech, I've been kind of working in always the next new thing, kind of. So I started with mobile banking back in the days when all the phones were black and white and only had WAP. I was pretty convinced that WAP is going to change the world, and sure enough, it did. It didn't turn out to be WAP, but it turned out to be mobile internet, which we use every day, which is something you should keep on the back of your head when you talk about blockchain as well. So always trying to find the next big thing. So mobile banking, then I moved to mobile payments. So I think I was saying, was it in 2008 or 7, I was saying that next year is going to be the year when NFC payments are going to break through. Turned out to be 10 years later, but nonetheless, I was again there, saying that this is the next big thing. And yeah, today you can use Apple Pay to pay at most stores today with Nordea cards, of course. But it's finally here. It doesn't look like what we kind of picture it to be in the beginning, but it's working now, much simplified. Again, something to keep in the back of your heads today. So then the question is, why am I here today? Why am I talking here about blockchain? Well, the origin story for me for blockchain and cryptocurrencies starts from 2013. I was speaking in a conference. Again, sorry if you've heard me speak before. You've probably heard this story, but I'll go with it anyway. So 2013, I was speaking in a conference called Future of Payments in a cards conference in Finland. And I was talking about all the usual things, host card emulation, near-field communication, secure elements, how complicated it is to deploy NFC applications, mobile payments, yada, yada, yada. And then in the last slide, I had a trends kind of section. And in there, I had cryptocurrencies, digital currencies, and Bitcoin. I kind of mentioned it, that it's an interesting way of handling value. I didn't really know much about that at that point in time. And then it kind of passed with just a brief mention, basically. But then after the presentation, the next presenter after me was a representative from the Central Bank of Finland. And she started her presentation by saying, with regards to the last presentation, Bitcoin is a scam. It will never go anywhere. You should stay away from it, and it's completely illegal, only used for drug purchases and so forth. So I was like, this must be really important. So I kid you not, the next day, back then I was working for Ericsson, and we're working with mobile money systems for the emerging markets. So we started looking into, can we actually use Bitcoin as a bridge currency for creating remittances between the developed markets and the emerging markets. Beyond that, we started looking into using blockchain technology independent of the cryptocurrency. And then, if you look at what Ericsson is doing today in that space, many of those things were started back then. So that's how I got into it. But finally, the kind of breakthrough for me when it comes to cryptocurrencies and blockchain really was when Ethereum came out. To me, the ability to create your own kind of contractual obligations and your own assets on a public permissionless blockchain or a system or a network was hugely intriguing to me. And then I became the annoying guy in the office who tells everybody that, hey, blockchain, 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 blockchain. And then it doesn't mean anything. Anyway, so I was that guy for a long time. And back then I was actually living in Dubai at the time. And we also worked with the Dubai government on a number of smart Dubai initiatives on the blockchain side. But then I got the call from Nordea Bank, which leads us today, which they had an opening for head of blockchain at Nordea Bank last year, and I joined Nordea 2017 in June. I moved back to Finland for this job. Now, what I've been doing for the past year at Nordea is been kind of creating a coherent strategy for using blockchain and DLT in a banking environment. And I have a fintech background. This is the first time I'm actually working in a bank as a kind of a regulated institution, and it's fascinating, I would say, in its own.
You're so polite.
In its own regard, but yeah, it's been an interesting journey, and we've been kind of getting good results as well. We can talk about those a little bit later. But to kind of cap my way too long introduction, I suppose, to a couple of things with regards to what Nordea is doing in this space, or the history of Nordea. Nordea started looking into blockchain in 2015, like most of the banks, by joining the R3 consortium. Most of you know R3, right? It's the evil corp of blockchain, right? So that's the consortium of banks. It's a private company, but it's supported by investors, mostly banks and financial institutions. And Nordea joined the club in 2015 with a very clear agenda in their head, which was fear of missing out. So they didn't really know, just like many banks, they didn't really know what this is. Is this going to be a thing? We don't know. So let's go into this group therapy club called R3 and talk to the other banks about how things are going to play out. Well, within these 3 years now with R3. Many things have happened. First of all, there was the mantra of it's blockchain, it's not Bitcoin, and then that turned out to be it's DLT, not blockchain. And then R3 decided to develop their own platform, which is the R3 Corda, which we're using in many of the projects that we're working on at Nordea as well. So the journey has led into a place where we are today, which is that we, as a regulated financial institution, cannot have anything to do with unregulated financial assets, ICOs, cryptocurrencies, you name it. But we are very interested in the emerging regulation that's coming into this space. We recognize the fact that the existing market structures can be optimized, should be optimized, and new technology should be used to make it better. But we need the law and the regulation to support that. I've always said that banks and what banks do is only a representation of the existing laws in the jurisdictions where we operate. We're kind of the operating system of financial infrastructure for our customers. And therefore, we have to go by the laws, and we have to make sure that everything we do is completely aligned with what the central banks and the regulators want. So, that in mind, what we're looking into as well is to affect the regulation. So I'm working in a couple of industry bodies. So I'm working with the European Banking Federation Blockchain Task Force. I'm also in the EBA Crypto Technologies Working Group. And finally in the European Union Blockchain Observatory Working Group for use cases and transition scenarios. The European Union Blockchain Observatory, just to briefly cap it, is a European Commission initiative to create blockchain awareness in the government space. And there's a small faction of banks, and I'm the only currently the only Nordic bank representative in the group. So, did I take 15 minutes or an hour? I don't know.
I think it was great in 5 minutes, but it's really good to know. I think maybe a lot of people coming here from Copenhagen have seen or heard about ARYZE before, but maybe not as much about what you and Nordea.
Yeah, we're in the news every now and then.
Yeah, exactly.
So, which by the way leads to my final thing again, which is a disclaimer. Everything I say here today is my personal opinion, unless stated otherwise. So, the Nordea's official policies and compliance policies, I will separately mention if it's a Nordea policy. Otherwise, it's my personal opinion. It should not be reflected as Nordea's view in the public space.
What he said with ARYZE also.
Great. I think that's really important to keep in mind, especially for the next question and the first question, which basically is to set the frame for the rest of the discussion. Where is it that we are going to see payments be in 10 years, and how does blockchain fit into that? It's a very big open question. So again, let's try keep it short, but give it a go, Jack. Maybe if you would like to say.
I think that 10 years is a really, really long time.
5?
No, it's fine. Let's go with 10. So in 10 years, if we look at all the exponentially growing technologies from smart clothing and the whole IoT ecosystem and everything with smart fabric and touchless gestures and contact lenses and glasses with screens and stuff. So that's 10 years. That's a long time. But I think that payments is going to be a very seamless and integrated part of everything. I think that you're going to be able to receive payments for stuff and pay for stuff simply by looking at stuff. So look at this banner for 20 seconds and get 25 Netflix credit or something. That kind of stuff, I'm not saying that I want that, but I'm saying that it is going to be so fully integrated with everything that we do in a seamless way. The rise of augmented reality and virtual reality and all these things make it so that the physical world becomes digital. And that means that it can essentially store, spend, and receive money.
Yeah.
Does it make sense?
Yeah,
taking that into...
So it becomes something continuous as well?
I think it is going to be something continuous between not only us paying for goods and services and for businesses paying for delivery of stuff. I think that we're going to see micropayments and nano payments between robotic arms that pays a thing to take it and drop it somewhere else. And this robotic communication, there's one thing is payment. As we look at payment, that I go and I buy some milk and I paid for this milk. That's payment, but another form of payment could be a tractor paying a silo to empty its corn into it. Right? That can be an automated process. So I think that everything is going to be more seamless and optimized, from agriculture to flight management to everything, and that will include payments in a form of, not a form of payments like I purchase something, but more of a consensus between two things before a third thing happens. And I don't believe that any traditional financial centralized system can handle that. The massive amount of computing power required cannot be kept safe, in my view, with a centralized service like Visa. They said, I spoke with them in San Francisco, they said that they get 500 million hacker attempts daily, because essentially their vault is a centralized thing, protected, but also by CIA, and the airspace is protected, and it's really an expensive operation. But I don't believe that any centralized system would be able to facilitate communications between self-driving cars paying each other to pass each other on the road because the person inside is in a hurry, and then to pay a light to turn green, and then like all these nano payments and micro payments cannot happen on current infrastructure, or the way that current infrastructures are evolving. Does it make sense?
It makes sense. I think one underlying assumption you have there is also that we are not using maybe Danish kroners only.
Oh no!
It sounds like
I don't think that we're going. Okay, so in that what we're seeing in the world of cryptos are, on one end, we're seeing totally anonymous, decentralized, crypto-based stablecoins, for example, that are not backed by any fiat value. So it's all cryptocurrencies in a basket, and then you issue a token on the basis of this, and this is a stable cryptocurrency. That's one end of the spectrum. The other one is some national banks themselves are looking into how they can issue e-money directly from a national bank. That's the other end of the spectrum. So if on this end, well, I don't think that it's healthy to have an anonymous currency like that. I also don't think it's healthy to have a Big Brother coin with a geolocation-based VAT or something like that, or programmable SU. I don't want that either. And in between, what we see is all kind of different versions of money or currencies. And I don't think that there's going to be one or the other. I think it's going to be all of them. And they're all going to have a bit of a share in the market and be used for different things. So some solar power tokens are great, maybe for a self-driving Tesla to pay a solar panel to charge it. But it will make sense that we pay the Tesla to drive it in krona, maybe. Yeah. And so different currencies will be used in different scenarios, and I don't see fiat currencies going away, because that's what we all use, and that's not going to vanish overnight. But other new forms of cryptocurrencies are taking their market share in this space. What I think, or what ARYZE wants to do, is have a platform that can handle multiple assets. So bit gold, bit oil, bit whatever, anything that can be essentially be tokenized. And we want to tokenize money as kind of an intro or partial acceptance into this cryptocurrency world. Right. So my mom can just use a mobile pay kind of system like she's used to, but she can send money to Armenia. She can't do that now. She has to like get Danish krona to dollars, and then we fly it over with a friend.
That part will simply be easier. And I think that is something that we are already seeing today. Ville, do you agree with that vision of the future, and is 10 years enough to get there?
To a large extent, yes. I mean, first of all, let's kind of couple of points. 10 years ago, where were we? That was 2008. That was the time when I was talking about NFC being the next big thing, right?
Yeah, exactly.
So put that into perspective where we are today. Now, 10 years from now, of course, like you said, development to a large extent due to communications and internet is exponential these days. So, it's going to be much more of a step forward than the last 10 years. The next 10 years is going to make much more of a difference. At least that is the perception, unless the global warming ends the world. But we'll see about that. But the second point I wanted to make was we need to kind of look at, when we look at the future of payments, let's put it into kind of different segments, right? So, there's the typical, what we do day to day, C2B payments. There's I think, the key words there is ubiquitous, like you said. So it's going to be payments, the intent of making a payment becomes so easy to establish that it kind of disappears out of the way. So invisible payments, I think that's the way it's going to be. We saw that working already with services like Uber, for example. So you never even think about the payment, you only get the receipt after you get out of the car. So that is the current trend, and that is going to accelerate. So I start to expect that payments just happen, and I will have kind of a view into what's happening, and I can stop certain things if I need to. But that this kind of ubiquitous consumer payments is one thing. Then there's person-to-person payments, which is a different angle as well. So the expectation for everybody is to be able to pay anybody everywhere instantly, preferably free. Now that free is a relative question, and we can talk about that later as well. But so faster, cheaper, better, smarter payments, and I think that's what's going to happen. Now, from a banking perspective, this is already happening. We are in all of the Nordic countries, for example, you can do instant P2P payments using mobile phones. So we have different schemes in different countries, but you can already do it. By the way, they're also free to use. Now, we recently talked about our Nordic payment initiative here in the between the banks here in the Nordics. So you will have, under what we call the P27 project, you will have instant peer-to-peer payments inside the Nordics. And again, that's going to be hopefully free, TBD. I haven't seen the plans, but to be clear. But the expectation, of course, that it's free. I mean, after all, SEPA payments are already free, even though they're not instant. So so this instant P2P is going to happen, and what we're going to start to see is that it will start to extend. So you will have SEPA instant finally. So you will have European-wide instant payments, and ultimately, we hope, of course, that the other instant payment infrastructures around the world will start to work together. And that's actually an interesting point, is that whether DLT or blockchain could play a part in creating those new networks.
Yeah, because when you say that, I mean, the natural question is, won't that be, so to speak, circumvented? Some would say that Bitcoin and other cryptocurrencies is going to make that redundant, and building that infrastructure redundant, because it will simply move faster than the existing banking center is able to execute.
Yeah, I mean, I think a lot of the innovation and new ideas, especially in terms of decentralization, can come from initiatives like that. But ultimately, if we examine what we have in front of us in terms of the Bitcoin network, I mean, it's widely publicized, the problems in the Bitcoin network,
right.
The mining fees and, expensive, it's slow. So, it really isn't an answer to any of those questions. And then there's the fact that it's also unregulated. The only reason why you're able to send Bitcoin to the other side of the world is that there's another person on the other side of the world that is willing to pay some money, fiat currency, for that. Because there is no acceptance for Bitcoin, no real acceptance. I mean, your month experiment was actually an interesting one, but still, there is no real acceptance for Bitcoin, in many times for these reasons as well. It's slow, it's expensive. So I think the funniest example was this Bitcoin conference in the US that stopped accepting Bitcoin payments because it was too expensive. So it doesn't really work. I mean, it's a speculative kind of crypto digital currency with no real ties to regulation in any elsewhere in the world. So yes, we can get ideas. I mean, the reason I'm working in a bank right now is because we believe that some ideas out of the technology can be embedded in a regulated environment. Yeah. But whether it's these new things are going to be the answer to instant payments around the world, not in its current iteration. So in the future, there might be a fintech that invents a nice way of doing instant payments around the world, and it becomes regulated, and it becomes accepted, and it gets enough liquidity in order to facilitate for these rails.
Yeah. So that's only what you have to do there.
Yeah.
Look at that.
And to kind of conclude my point, the key is in acceptance. It's basically being there present to make it, make these new ways of paying valuable for the users who actually need that to, go on with their lives. And I think what people many times, especially fintechs, underestimate, including myself, by the way, 10 years ago, underestimate is the amount of effort it actually takes to create an acceptance network in anywhere in the world. So for example, MasterCard and Visa said 10 years ago, they were in conferences saying that we're not worried about any of these fintechs because we know the amount of effort it took for us to get Visa and MasterCard accepted around the world. So they are so tightly embedded there, and the amount of work that goes into being present, so omnipresent all around the world, is a massive amount of work. Now, whether someone else is able to do that in an effective way, yes, it can be done, but it's going to be a lot of work. And I think the underestimating the acceptance question seems to be one of the fintechs kind of.
So one approach to that issue could be that here we are dealing with a new form of infrastructure where it is not a centralized entity that is going to make money of there being a broad acceptance. Do you think, is that something that you're seeking to drive, and how do you go about?
No, I think you had some really good points, and on a lot of things we definitely do agree, which is positive, of course. However, the misconception here, I think, that the dialogue only concerns Bitcoin in regards to being money. And I don't think that, I lived on Bitcoin for a month, and I don't think that Bitcoin is money or should be used as money, as the I buy milk example. No, it shouldn't. I bought a tattoo, and now it's the world's most expensive tattoo. That was quite silly. So no, Bitcoin should not be money because the design of it makes it, everything else than stable in essence. So if we just look at Bitcoin with different eyes, and now we call everything Bitcoin, right? Because that's the headline. But I'm talking specifically about Bitcoin, created by Satoshi. So Bitcoin has the more computing power in its system than any supercomputer on this planet, actually times 8, I think it was. And that's Harvard and NSA and MIT and all these grand supercomputers. It's a dumb supercomputer. Yeah. It's a very, very dumb supercomputer. But one thing it's not broken. Its consensus and its truthfulness is uncompromised. So if you look at Bitcoin as being money, it's like looking at maybe a Netflix voucher as being money. No, it gives you access to something with Netflix. Now, Bitcoin gives you access to engage with the Bitcoin network. And because in order to send Bitcoin, you need to pay in Bitcoin the miner's fee. Yeah. So if you want to complete payments in that raw format, you can, essentially, because there's a buyer for it, and sure, it now has a price and is traded. But what if I say that, well, we do rock, paper, scissors, and we save the result in a transaction on a blockchain, and now it's forever stored there? What kind of value does that have? Well, maybe nothing, but if this rock, paper, scissors was like the world championship of scissoring, maybe this would have a value. So paying the miner fee to save this on the blockchain could be fine, paying a few bucks.
So notarization services definitely is coming to Bitcoin. But you're saying that Bitcoin is one way of using a token. So what is it that ARYZE seeks to do around that issue where it's only one token? And where are you on that front in terms of building the product, and what are the difficulties of building the product where you can use different tokens for different things in the real world?
For us, it's about creating a mobile app that can hold multiple assets, and some of these assets will be issued by us. Some of them will be cryptocurrencies like Bitcoin or Ethereum and existing systems. Yeah. The ones that are issued by us, we estimate to start our launch with supporting 3 currencies: Euro, Krona, and Dollar. But we will be in a network of 21 currencies 2 years into launch. We are planning on working with banks in each country to support the issuance of the actual asset. Yeah. So initially in our application, my mother could use Krona, someone in the US could use it for dollars, I could use it for my Krona and my Bitcoin and my Ether. So it's a multi-currency asset. But that can then develop into so much more, because what we're seeing is tokenized house or property, and tokenized pink slips for your car, and tokenized gold. So essentially, it's a bargain economy. I think that's what it's called. Back in the days, you could trade some sugar for some meat, but now you can't. But
which leads to one central question, which is, what are the difficulties technically of doing those integrations? So some people are looking at atomic swaps to do it blockchain to blockchain. And here you're using the same application to do that. What are the difficulties that you have experienced in doing that?
In the as you touched upon, the blockchains themselves are not like super mature, so you can't say. People like to say, well, the Bitcoin network cannot handle nearly as much as Visa handles in a day. Well, it's because it's not intended to work like that, in my view. So what we're seeing is networks like the Lightning Network for Bitcoin. We're seeing the Raiden network for Ethereum. We're seeing updates of Ethereum to new protocols going from heavy working, from proof of work to proof of stake. And we're seeing a lot of new third generation blockchains that are much faster, much more efficient. They still have their own issues. Yeah. Some are trying to solve this problem with using the computing power on your own device. So technologically, there are some challenges, but they are every day being solved to handle more and more. Maybe we couldn't handle the world's transactions, but we could easily handle Denmark's transactions on a permission chain that synchronizes with Ether.
I think then the real important question then is, why is ARYZE better positioned than Nordea, for example, or any other existing financial institution, to be the one that provides that?
I think that's a really, really good question. Yesterday, we were speaking with R3 actually and Nationalbanken at a really, really interesting event, and the kind of bureaucracy that the establishment is ruled under makes it so that innovation is really, really slow. Yeah. And from a Nordic range of banks to creating something, and then banks in the US creating something, and then banks in Asia creating something, the chances of these products being interoperable by nature is slim to none. However, these cryptocurrencies are in essence on the same, they live in the same universe. So making those interoperable is much more realistic. I think that it's really important for banks and corporates to work closely with fintechs and the other way around. That's why this place is amazing. They keep inviting a lot of banks in. So,
do you agree with that, Ville? The statement that banks will have too many cumbersome integrations to do worldwide, so they should use the cryptos instead?
Yes and no. I agree that it is impossible to ensure interoperability when you're building a network if you're building it in silos. I mean, that's not going to happen unless you have it as a design principle for day one, and that is in fact what we're seeing today. But there's a reason why these networks, DLT networks, are being built the way they are right now, and that is local regulation and local governance mechanisms. So lifting this kind of question outside of the DLT blockchain space a little bit, Apple Pay, for example, or let's say Amazon, for example, they launched in US a long time ago. Why did it take so long time for them to come to Europe? Why don't we have Amazon Prime, for example, in Finland today? I mean, I know they're now coming to the Nordics, but it's the internet, right? So you should be able to go to Amazon website and deal with them. No, that's not the way it works. What Amazon needs to do is they need to come here, they need to establish an entity, they need to establish their network, they need to comply with the local governance and local laws, and they need to deploy. And that's what's happening. The same happens for every digital service that you see. Even though theoretically you have your accessible services all around the world, you still need the local leg to execute that. And that's why we see, for example, kind of pivoting a little bit to the role of banks. I mean, we are the kind of, like I said, the operating system of existing financial regulation. So we are open to global fintechs to come into these markets so we can make them work in the local market. So we are kind of this integration layer, if you will, into the local laws and regulations. And that's what we kind of intend to be. But then pivoting then again back to the DLT local network question. Well, if you take this kind of local laws and regulations and local deployment as a background, we need to do the same thing for DLT networks. Good example is, I don't know if you're familiar with the Sovereign project. Anybody? Okay. Sovereign is a foundation that is building self-sovereign identity network, a global self-sovereign identity network. The company behind the Sovereign implementation is a company called Evernym, a private company. But the Sovereign Foundation in itself is a global foundation of universities, non-profits, and so forth. And it's based on Hyperledger Indy. So Hyperledger Indy is one of the Hyperledger projects, and it powers self-sovereign identity for corporates and individuals in a way. Now, what Sovereign wants to do is they want to take Hyperledger Indy and create a global self-sovereign identity network. A very, very interesting vision. But if we look at that from a banking perspective, from a local Nordic regulation perspective, we don't know who these validating nodes are around the world. And therefore, it will never work in an official authorized KYC environment in the Nordic countries. So what we're doing instead is that we're asking the question, could we actually create a local version of that? There's nothing stopping from us doing that, where we actually get regulated, trusted institutions to be the validating nodes in the Nordic countries, and therefore creating a locally governed, in the beginning, an island network for self-sovereign identity. So these things can happen, but they always have to come from bottom up instead of top down.
Yeah.
And that's the reason why you see silos and islands today. The interoperability question is a problem right now, but it's going to be solved in the future. I see, these islands start connecting with bridges, and ultimately you will have a global interoperable network. And to conclude my point was that if you look at the way GSM networks, for example, were created. When you got your first mobile phone in the 90s, you were not able to send or even call any other mobile operator networks. But gradually, first you were able to send an SMS and start calling other mobile phone networks in the same country. Yeah. And then finally Nordics, Europe, and now you can do whatever you want globally, and it just works. So I think we're going to see similar evolution now with these DLT networks. Yes, there are big technical questions in terms of certificate authorities and so forth, but again, I think these will be solved down the line.
Cool. I think a lot of what you're saying there is related to the infrastructure. Yes. Of how the financial institutions they work, how they are operating the local jurisdictions. I like that phrasing of it, which leads to the next question, which is really about users, because if that is what it's about, it's the infrastructure, then do you need to own the end customer in order to provide those services that you're talking about there? Well,
today we have plenty of companies working in this space who are huge companies, but that our customers never even hear about. I mean, they are completely invisible. So payment processors, networks, everything in the background, different kinds of institutions, nor should they. I mean, these, I strongly believe that, the typical user on the street does not need to be exposed to the infrastructure components of any service. The example that I, of course, like to use is our own trade finance project using blockchain technology called WeTrade. Anybody here heard about WeTrade? Good. Some people at least. I know you should be. So that's David from Danske Bank. So the WeTrade network is using Hyperledger Fabric in the background. And it's built by IBM, and it's a kind of permission blockchain. We facilitate SME trade between 9 banks in Europe using WeTrade. We are live since June, so we're the first Nordic bank to go live with a blockchain solution in a multi-party environment. So the way you, as an SME or small to medium-sized company customer of Nordea, interact with WeTrade is that you log into the portal and you create a trade agreement with somebody else in the network. You do not need to handle keys. You don't need to have any blockchain addresses or private keys. It's just a great web service. So it's completely invisible for our customers that it's actually using blockchain. And if you read the kind of marketing communication that we're going to do, in the near future around that, the word blockchain is not going to be mentioned once in that. So it's only about the value that we bring to the customers. And I guess that's the philosophy of Nordea as well, with DLT and any other technologies, that we go customer value and better, cheaper, faster services first, rather than kind of try to embed it and, we built it on this fantastic new infrastructure. Isn't it cool? Well, I don't know. It's the answer from many customers.
Yeah.
So.
But then the whole backend infrastructure could basically be outsourced to others. If Nordea and the other banks are only the front end, then it becomes about the trust of the brand, essentially, and the usability of the app. Do you agree with that?
Yes,
or?
I mean, and there should be a lot of competition in that space. So for example, it's fairly easy to change a bank, for example, in the Nordics right now. So if you're not happy or you're completely disappointed with the service that you're getting from your bank, yes, you can change your bank. It's still a bit cumbersome process, and many people just don't bother doing it, which means that they're really not feeling that much pain. You can and should change your service if you're not happy with it. Now, then there's new digital entrants, especially in the area of mobile payments, that are kind of coming in because these phones have an operating system. So that is what you interact with every day in your daily life. So then the question is that why can't the operating system provider provide better, more native services on this device? And that is exactly what has happened. And that's exactly the strategy that Nordea, for example, has embraced in payments. So we're working with Samsung Pay, we're working with Apple Pay, we're working with Garmin Pay, for example, for the wearables. And Fitbit Pay as well, coming down the line. So there's a lot of these pays that we have identified that we as a bank cannot build the best device, nor should we. So we should just go where people are and offer our services where people are. So we have already started working. We don't want to own the whole customer interface, only the critical parts of it.
Right.
And I think that's a strategy that we have. Some other banks have a more kind of siloed strategy where they want to own the entire channel, so they don't want to work with Apple, they don't want to work with Fitbit. And I think you should pick and choose the best possible delivery channel for any service, whether that's blockchain service or payments in general.
And how does ARYZE go about that? Because what you're seeking to build is massive in scale. If you want to be able to take all tokens and easily be able to use them for different payments. Is it the user interface where you really say that is gonna be where we are good, or is it infrastructure backend?
I think it's really interesting. For us, it's we want to be technologically agnostic. So we're going to use blockchain system where they make sense, and we're going to use centralized system where that makes sense, and permission chains where that makes sense. I don't believe in the whole anarchistic scenario about creating a new form of money. But you touched upon a lot of interesting things. Amongst others, these identification systems where essentially we're seeing a system pop up that is open source, and then to comply with local rules, it has to be adapted into that market, so to speak. That process goes again for not only identification systems, but also for blockchain in general. So it was invented, and as Bitcoin grew stronger and stronger, and more tokens came up, and all that happened, well, banks and others start showing an interest in this to see what can be done and how can we use this in our systems in a regulated manner. And I think that's great. In the same way as when IBM works on Watson, we all can get better and easier access to AI tools. And if someone creates a smaller chip, I have a better phone in my hand. So I think that it's great that corporates and banks are also looking into how DLT and how blockchain can make their own systems more efficient. One thing we have to realize, though, is that the other world over here, they're still moving 5,000 kilometers an hour over here on cool stuff. And then the next cool thing is like digital ID. And then, some people go together with some NGOs and they spend 5 to 7 years on implementing this ID system. But this other world is still running ahead. So my point with all this is to say that when you don't ask for permission, so to speak, you can really accelerate what you are doing. With ARYZE, we do need to ask for permission, and we need to get permission, because we don't want to create a form of cryptocurrency that is unregulated and we still don't know what it is and we're waiting to see what it's going to be. No, we're a Danish fintech that operates that has to operate with an e-money license. We need to work with banks who have banking licenses. We need to follow all KYC and AML processes in each district, and essentially our e-krona is governed under the rulings of the krona, our dollars with the dollars, the euro with the euro. So for us, we have to comply. But I think it's really, really important to realize that this other world that is going on, the world of different blockchain and different networks is really, really, really efficient and going really fast. The form of innovation that we have seen in Ethereum since it was released publicly 3-4 years ago to now, that I have never seen a corporate, and I have been quite around, work in that tempo at all. And they shouldn't, because the ones working on Ethereum are the creators of the deep tech technology making up the fabric of Ethereum. So I personally don't think it's about taking Ethereum and doing forking it, basically taking the code and running a new chain called Jack Chain, and then using it as my closed permission chain. That's fine, it could work with the state that Ethereum is in now, but all the other work that happens in the core Ethereum platform happens on the core Ethereum platform. Then I can go and fork that after a few years and implement that into my system. But it's not about waiting and seeing what happens to then take it and use it and make it closed. It's about, I think, using it for what it is, one of the world's most powerful supercomputers.
Yeah.
I don't see why one should take a system and try to centralize it in order to provide governance, when there are other ways of providing governance directly into the token itself. For example, ownership. If you have ownership of this ID, why should the state work against it? They should try to be part of the multi-signature fabric of this. Say, okay, the person has a key, I have a key, and work with it rather than trying to work against it. Because this thing is, you're never going to have a global identification system if someone in the Middle East uses a separate system from someone in Russia and someone in the US. These systems will not be by nature trustworthy because each state has their own agenda. But if it by core is invented open source and publicly and by the people in a sense, and we can kind of have the voice and the strength to force this onto the regulators. Say, look, this is the thing that people want. We don't want this form of identification system that beeps if I go in a zone that I'm not allowed to go in, and then my Apple Watch gets hotter.
So I think we're touching upon the
okay, that was maybe a bit out there.
We've been dancing around a central issue, which is the regulation. So I think it would be interesting for both me and everyone else to hear what are your experiences with the regulators here in the Nordics, and if you could just go in and say, I want 3 wishes or something like that, have a genie. What are the 3 wishes you would have to the regulators today, where you say, this is what we need to change in order to accelerate into the seamless payments future?
Much clearer regulations about ICOs and new forms of fundraising, and also like in regards to the whole taxation and VAT situation, and basically doing an ICO from the Nordics.
So here, so doing an ICO in the Nordics.
That's one thing that will be amazing. And another thing is removing some of the entry barriers still to get access to banks. It's hard for fintechs to get banking partners. It's hard for to get, even though what you're doing is not completely abstract. I'm not saying for ARYZE, I'm speaking about other more down to earth concepts. But it's very difficult to get a bank account, and you have to have one, and it's quite expensive. And I think it should just be easier for innovators to start building. But Denmark is a great place to run a business. I would say we can get started with an Iværksætterselskab pretty quick, and we can get the wheels turning in just. Today is our 1-year birthday. ARYZE's 1-year birthday. So in just one, thank you. I just realized. Yeah, we got incorporated 1 year ago today. So we do have a lot of possibilities from Denmark, but the regulators need to work faster and more clear. One thing is the ICO itself. And the other thing is simply, in regards to everything from, for example, GDPR and AML, they contradict each other quite a lot. And if you're looking at blockchains and GDPR, so the right to be forgotten versus nothing shall be forgotten, it's not really clear how, to me it is, there's a way to work with it, essentially giving people access to the keys, so the data is there, but it's not readable. And I think there's a way around it. But the discussion is just very, very slow with the regulators. But I would say to the FSA and Finance Institution in Denmark, we're quite close with them. Go there quite a lot and talk about our challenges and what we can and what we cannot do. And I think that they're open and they're progressive, in that sense. They want to see what they can do better, but they themselves are also governed under a lot of rulings. But we operate in a global world, and the fact is that if regulators do not work too fast here, well, I'm going to, at 3 o'clock today, I'm going to London. We have a dinner with DLA Piper, who's very much looking into how UK regulation can fit around the ICO world. So a lot of stuff is happening with due diligent exchanges and compliant exchanges that launching from the US next year, and only regulated ICOs. And there's a lot of stuff happening, but it's just not happening from Denmark, unfortunately. That could change, yeah. I guess if I had a wish.
Yeah. Same wishes or?
Kinda. A few more nuances to add to those. So first of all, clarity in regulation. And if we kind of look at the kind of history of how this kind of discussion came to be, so specific topic on the ICOs, for example. So I think, a lot of the regulators are watching what's happening in the US with this regard, and, there's been some clear statements on how certain coins are in fact considered as securities. But it's a very, very slow moving thing. I think if I had a wish, I would ask them to move faster. They've already established the guidelines very clearly. I think, they even had this funny white paper, Howie coin, basically how do you create a scam, ICO scam, and how do you tick all the boxes of being illegal. I think they've established these guidelines. Now what they need to do is to start enforcing these guidelines much faster. So that would be my one kind of wish for the regulators. The second is I hope that the regulators keep in mind one clear thing, which is to regulate and control the intent, not the technology. They should not be fooled or distracted by DLT, blockchain, permissionless, Bitcoin, whatever. Don't get distracted by that. Look at what the company or the project is doing. Ignore the technology. If you need to replace the word blockchain with a database, and in order to get down to what the company actually is doing, and create clear regulation laws and limits around that. And once you have that, then you have regulatory clarity. And then you finally have a good way of interacting with already regulated financial institutions as well.
Mm-hmm.
So, and that links to the bank account question as well. There's a very clear reason why crypto what companies dealing with crypto are having a hard time getting bank accounts, and that is that there is an extremely clear guidance from the regulators inside Europe, at least, to not provide bank accounts for kind of unregulated financial institutions. So
that's not the same as being a crypto startup, though. We're regulated a financial institution.
Yes, you have an e-money license. So I mean, that's that is your ticket to actually being legitimate. So getting an e-money license is a way for you to always go back to and say that we are complying to the KYC and AML regulations because we have to do the e-money license, and this is how we do it. So you have certain reporting responsibilities to the regulators and so forth. And I think that's the thing that you should also push towards, is that look, we are an e-money institution and we should be treated equally to other e-money institutions, which by the way means that if you are indeed sending money or assets to another country, you need to make sure that you are fully compliant with international money transfer rules. And that kind of circles back to the question of can you use this technology to be more efficient in the existing regulatory frameworks.
So in respect to that and creating that bank account, just saying, for example, that the e-money license, okay, that's license to play, but doesn't that line become extremely blurry when you have all of these tokens? I mean, if you tokenize the ownership of the asset and you say that it's points instead of tokens, is it then okay to transfer it across borders? What I mean is, where does the limit go? I mean, if we tokenize the computer and I pay with the computer tokens, I still need a bank account to do that.
Abstract that and look at the intent, right? Yeah. So what the regulator is looking at is that they're looking at that all the actors in those transactions are known for the reasons of preventing crime, money laundering, and terrorist financing, basically, in the world.
Great.
So, and the third, of course, is consumer protection. So they want to, or citizen protection. So they want to protect citizens from being exposed to, scams and so forth and so forth. That is what the regulator is trying to do. It is a common conspiracy theory that they're just trying to kind of make sure that the incumbents stay in power, but that's not true. If you look at if you talk to the people there, it's very clear that their only intent is to protect the rule of law and the citizens ultimately of the jurisdictions where they operate in. So the reason why I'm calling for clarity in terms of token regulation, for example, is that yes, you can tokenize your computer, and yes, you can transfer the ownership of your computer, and that should be then regulated as a sale of that computer and the ownership rights to that computer. But if you suddenly use that to launder money from, let's say, Malaysia or whatever, then that's a problem, and the regulator needs to see that. So they need to have a kind of a container for these assets. So yeah, I think that's the clarity in these questions is long overdue, in my opinion, and I hope that we get there one day. We're already seeing positive signals from the local FSAs, and to a certain extent from European Central Bank as well. They're giving more and more guidelines when it comes to this.
Do you agree with that statement that the regulators need to see the containers? Because from what I'm hearing here, if I have tokenized everything in my house, if the regulator is able to see all of the tokens that I have, then
let me put a regulatory container. What I mean by that is that it needs to know what that thing is, what are the constraints of that thing. So when you transfer the value of that, they need to know the fact that you transferred it. They don't need to know what it is. I mean, we can go into the nuances of of the technology.
So they need to be able to see something happen at this point in time,
and whether there's criminal kind of activity involved with that, they need to be able to pick that up. And they want to prevent that, of course. I mean, that's the whole reason why we have regulations in the first place. That is, by the way, why the ICO bubble went as it went. I think most of the coins are now close to zero now after the kind of air went away from the market. And the reason why that happened is that there was no regulations. I mean, there's blatant scams and fraud going on in that space. And the reason is complete lack of regulations and control and enforcement ultimately.
How do you in ARYZE go about solving that issue, where the regulators need to be able to see what is transferred when, and that this lived up to the AML requirements that are there?
My personal opinion is, I honestly think that the only way that the regulators could is by working with people who develop tools that let them do so, like Chainalysis or something, because fact is that these systems, BitGold, BitOil, Solar tokens, IOTA, all these things are being developed by the open source party. And they're not going to build in tools into Ethereum like an API plugin from the FSA to do stuff. The only way that the FSA could do whatever or see whatever is if by looking at what's publicly available. They can see the same things that I can see. They just need to be better at analyzing the data. And this is where Chainalysis and systems like them come in. So for example, in our token sale, when people pay with Bitcoin in our ICO, we use a Coinify to exchange into Krona. And Coinify is working together with Chainalysis to track the Bitcoin, to see the history of the Bitcoin. And this can get more and more and more complex, of course. But the only way that it's in the core technology, I'm speaking about Bitcoin and Litecoin and these core technologies, that's never going to be built into the system. We operate in a you could say a layer on top of these open source systems. So we're going to use dollars to pay Amazon, Krona to pay UC, and Ether to pay the Ethereum network.
So when you
for us, it's just a tool that we use. So one thing is looking at the regulation around the core technology of the Ether and gas and Ethereum. And one thing is, as you said, where do we operate and what do we do? And we want to have my mother use our application to pay in a supermarket. So we're talking about not Danish, but regular businesses and regular individuals. And there we all, of course, have to comply with the rulings set.
And the way you go, as I hear, the way you then will go about it is to license, when it comes to all of the Bitcoin, Ether, and so forth is to outsource to Chainalysis
It was just an
relevant
example, but in the same way that when you want to create an onboarding process, we would work with Nemide, which would be obvious, for example.
Yeah.
In the same way, you can use other risk analysis systems to do so.
Yeah.
And to enforce it, we see a lot of interesting concepts in the crypto world as well. Colored coins, for example, is something that has always been there, where in the same way as you can save the title of a song in an MP3 file and send it to someone else, and then he can see the title, basically saving something in the metadata of the file, you can do that with crypto as well. So you can flag illicit tokens, for example. So if something is not compliant, or something is used for terrorism or something else, you can color it and essentially make it worthless. But you cannot do that unless you have different layers. So you cannot do these things on top of the core Bitcoin, but working with Lightning Network layers that speaks with Bitcoin, you can. And the whole other way around is the central banks issuing e-money on Hyperledger, fully controlled and centralized, all automated by them, and no underlying mesh network that spreads it out, no distributing power. And I don't think that neither endpoints of the spectrum are healthy. I think it's about figuring out how we can use these open source consensus networks where everyone from...
And what's the plan there? So what is the plan in that spectrum? Where's ARYZE gonna put themselves, and what technologies do you
our own token, the ARYZE token issued in our token sale, is going to be issued on Ethereum as an ERC20 token, compliant with other ERC20 tokens, and that will make more sense. Our stable coins will be based on a hybrid model of different systems.
And you will know the owners then of
yes, we will. You can think of us as that we will know the same things, that we will know the things that we should know about you, that we have to know about you, like mobile pay. We have to comply with the limits of the krona, like mobile pay, like PayPal, like anybody else. So in that sense, we would know all these things. The main difference is that the money that you store in your application are fully backed and yours, and the data that you store is yours. So essentially, we will not advertise to you, we will not sell your data, we will not do any of these things. We will have it, and because we need to comply with certain rulings set, but we are not.
How do you make money in that then?
We're going to make a little bit of money on a lot of transactions. So on FX, on crypto trading, on merchants paying a monthly subscription to or annual to use our merchant products, on various different elements, we're going to make money.
Okay, that sounds very traditional banking.
Well, what we do offer are quite traditional banking services, but without being a bank. I believe that people should be able to borrow money. I just don't agree that it has to be from your bank. It can be from Lendino, from peer-to-peer lending network of people. So I agree that we need the concepts that make up the fabric of our current of financial infrastructure. We need those things. With our IOU model is not invented by me or anyone else in the team. It's a structure that has been developed over time and used by financial mediators. We just want to make that process more efficient by using new kind of technologies that are coming in. So it's not as abstract as people might actually think. We're not inventing this whole new revolutionary thing. We're just using a piece of tech
to do those things.
Yeah, I think it's actually quite fascinating, because I'm deeply compelled by the fact that you're kind of starting from a completely, hey, let's reinvent the whole thing, let's do a kind of global ledger of value and work from there. And as time goes by, you start to see more layers coming in, for instant payments. You start to see for KYC applications. You start layers, and then it starts to resemble the banking infrastructure that is today more and more, with the very important difference that now that you're building it from digital, from the ground up, you actually have the chance to create a more efficient way of doing things. But that being said, that takes time, and it still remains to be seen whether this kind of fully digital, let's reinvent everything approach is going to result in good consumer services. I hope so, because we need challenges as incumbents, but we also need to start looking into, like we already talked about this before, is that we need to take the cues from what these guys are doing, and if it's better, then we should move into that direction as well, and maybe we're going to meet in the middle. Who knows?
Yeah. So you're hoping for the meet in the middle do you think it's possible that you will see, some fintech coming with a 10x improvement like ARYZE? It sounds like if you're reinventing, it's going to be a 10x improvement, and then you're going to revolutionize.
Well, you can argue that if you look at the what they call the challenger banks or the new digital banks, they are not blockchain based, but they're kind of typically operating on an e-money license, and then we're going towards a full banking license. Some of them at least, they are to a lot of people already 10x better. So everything is nice and silk smooth and fast and looks nice, and you get a nice colorful card, and everything is so much better than the incumbents. So yeah, I mean, those things kind of move the incumbents forward as well, and they are automatically faster because they are smaller, more concentrated teams, with a clear vision and passion. Whereas we've been here for 120 years, so you have a lot of sediment in the organization. So it's the typical, when you've been there for a while, you get certain structures in place, and you're not able to evolve as fast as a small corporate with a clear vision, or small company startup with a clear vision. You're able to execute much faster. Now, then the trends from the kind of regulatory and law perspective are very much favoring the fintechs in many ways. You see PSD2, you see the identity regulation for ADAS, for example, opening up the identities in much more, so basically giving signatory rights to digital IDs. And all of these are favoring these fintechs to come in and start to nibble at the business of the banks. And I think when I say that we're going to meet in the middle somehow, is that it's all going to result in a kind of this mesh of interesting services for the users, and they will have a better choice of to choose what they want to use and what's the best kind of option for them. But what we want to always, as the boring banks, want to remind is that we should always comply with the law and stay on the right side of financial crime, which is to not do it.
Which actually leads, and that regulation is different for different jurisdictions.
Yes.
So, which leads to the very interesting question. Now, you are exploring different options in terms of where to do the ICO. Regulatory arbitrage. Is Nordea using that? Because that's a very Nordic bank, so the limits for doing regulatory arbitrage is probably fairly set. But when you are a fintech startup, you are able to basically go around the whole world. What are your thoughts on the opportunities for doing regulatory arbitrage within all of this space?
Well, you would go where you can work easily without an anchor, right?
Yeah.
I think that's what you're... for example, if you look at Europe, and if you go to Luxembourg and look at those areas, you can operate in the same manner as you could from Denmark without much hassle. You can go and do your ICO regulated in Switzerland tomorrow without much issue. What we want to do is, again, we cannot do that because in the end, our customers are not going to be crypto exchanges and this whole crypto world. Our customers will be average people. So it's also part of our identity that we chose to do it with a Danish DNA. Right. The fact is that we are limited in what we can do here in Denmark, and we would love to, within 6 to 7 months, when we do have our public sale, to have it from Denmark with the FSA in a structured and legal manner. And we proposed that, and so would they. But realistically, 6 months is not a long time where they come from. So for us, we have to look elsewhere. And that's why we have to go to speak with DLA Piper about how the scene is in the UK, because doing it from the UK give us a much quicker access to the US markets, and they're much, much more ahead and progressive than we are. I think in Denmark, we just had a few ICOs, the main one being block shipping structured by Kammeradvokaten, which is nice to see that Denmark is also doing some stuff. But the challenges here are, it's on a case-to-case basis of each ICO, and God forbid that your ICOs should resemble being a hybrid model, where it has a utility and maybe a security element of it, and that will probably extend the whole process for, 7 additional months. So,
do you see it changing away from case to case, or will that be the foreseeable future in the Nordics?
I see that if you just do one if you're going to do an ICO that has already been done quite a lot of times, so an obvious proof of stake blockchain that has been done a lot of times, an obvious utility token, for example, or an obvious payment token like our stable coins, and then that part is quite easy to get understanding about that. The challenges come in when you need to when you need them to understand something that is a bit more complex.
Yeah.
Specifically, one of our issues, I have a group of 14,000 people I've had since 2013, I think, when called Bitcoin Talk Denmark.
Yeah.
Just a bunch of crypto people. And I had that group forever. I have to be very, very I have to be very careful in what I say, because it is a large group. So if I talk about the ICO, our token sale, it is I have essentially marketed this potentially financial instrument to more than what the prospectus rules allows me to do, just 150 people per EU country.
Yeah.
Some stuff is just ridiculous, because the guidelines are set from way back in the days where you could send 150 letters out to investors, probably with pigeons. But now, you know, it's a different world.
Smoke singles.
And it's kind of weird, because the reason why it is like that here is because we are doing very well, and it's good enough. We don't have the same reason to work as fast as they do in some places in Africa or Asia and Middle East, where a lot of innovation is also happening. So here, back in Denmark, it's pretty good.
Yeah.
You know, it works. We're all connected. We have mobile pay, we have NemID, we have ABOX, and we have the social security register. Everything kind of is good enough. So when we fall back a little bit, we spend 4 or 5 years in optimizing our IT infrastructure and building new systems that are like a second version of what we have already built 4 years ago, and we kind of slowly update. But the ones that goes really fast are the ones that have a much bigger incentive to do so.
Yeah.
The ones that are not as fortunate as we are in Denmark. M-Pesa had mobile money before mobile pay was even a thing here.
Yeah.
And I spoke with someone from the National Bank. I remember him talking about mobile payments and how amazing it is in Denmark. And then somebody said, well, in Africa, in Kenya, they've had it way before. So no, essentially it's not so amazing. Actually, there are fewer mediators using mobile pay or intermediaries. No, sorry, M-Pesa. There are fewer middlemen involved than when we use mobile pay. Now we have the banks and the card schemes and
of course. And
so some people are way ahead of us, and that's the challenge. I don't want Denmark to fall back. The most digital country in the world should be the one creating the mobile payment application that the world should use, not let's say the US with Apple Pay and Google Wallet and all these things. The US is not very digital.
When you look at
the numbers, it should come from us, we believe, or the Nordics.
And how do you see? So you talked about Nordea's blockchain strategy.
Yeah.
How is regulatory arbitrage where is regulatory arbitrage in that strategy?
Well, I should mention that we moved headquarters from Sweden to Finland just now, so
big changes.
It happens. It happens. Turns out the Swedes didn't like it for I don't know why. I think it's fine. So yeah, we follow the regulation, as well. So if there's unfair conditions for us in certain countries, so then we move. I mean, we have the right to do so as well as a bank. So it happens in regulated circles as well, and there's very clear mechanisms of achieving that. And I think the fintechs should be in the same position. They should be able to move to the jurisdiction where they get treated fairly.
Yeah.
Now, that being said, we have to remember that it's a connected world. Everything is connected. So I was, for example, in the Consensus Conference in New York earlier this year, and there was the Prime Minister of Bermuda was there, and he was giving a speech saying that everybody come to Bermuda. We don't, ICOs, welcome. We will have the regulation to meet your needs. Welcome. We will give you bank accounts. We will give you nice beach villas. And then
And they were in the Bermuda shorts as well, right?
Yeah, he was wearing a suit, but it was a funny situation because then he said, yeah, we have a conference room booked here, so we will sign up ICOs to come to Bermuda, and then there was like a long line of ICO companies going into Bermuda. But I guarantee you, if you as a ICO company go and get regulated in Bermuda, you have no business of coming to work in the Nordics or offering services in the Nordics. So there's very clear kind of legal constraints put around these kind of regulation-free zones, so to say. And Bermuda is an example of that. Now we are seeing places like Malta right now coming up in Europe as well. with similar intents. Now, it's fair to say that the ECB has their eye on Malta right now, so it's not going to last forever either. So yeah, you have to remember everything is connected.
Yeah. Question?
Yeah, I don't want to be the annoying guy in the room, but you mentioned your mother. Why would your mother pay with 1 krona in the supermarket?
Well, specifically for my mother, probably because she will be incentivized to do so. Our application is, funny enough, branded MAMA, which stands for Multi-Asset Modular App. So we want to create a multi-asset app, but that has a kind of a modular market, like the Chrome browser has an extension store, so you can install plugins to Chrome. Individuals should be able to activate the features that they want and require, so that in MAMA app, I could activate a trading module and do crypto trading, or I could activate my SAS flight card system and then hold my flight miles in the same app. The incentive will come from a shop telling my mother to do so and giving her something for it. So Co-op will be incentivized to give her 5% savings by activating the module in MAMA. Co-op will get a new customer to their e-money silo system that they already have today with 7,000 users or something. They would onboard a tourist, or they would onboard an exchange student, or they would get a new customer that otherwise they would have never gotten. And for that they could give some reward back to my mom. So the example with my mom was, she will not be our first user. Our first users will come from people who want the multi-asset support and the exchange option between the multi-assets. So we have already a large group of individuals and ambassadors, and they're techies, so holding Bitcoin and buying Krona, and they will use the core functionality. They will have a connected payment card, like any e-money, any card like Revolut or LunaWay here, so you can use your multiple assets anywhere supported. The users will come from businesses starting to incentivize them to join. And this, for example, today when we fly over to London, tomorrow I'm meeting with Sodexo, and they have over 400,000 employees in 80 countries. And for them to pay out salaries in all these countries, it's a big hassle, not to talk about managing all the other stuff. Well, I imagine people will get their salary paid out, receive it directly in this application on their phone. Globally looking, my mother will be one of the last persons to use it, because we already have something that is good enough. But the people who will start using it will be migrant workers paying heavy exchange rates and a lot of fees to send money back home. People working from India and the Middle East, and it's a huge market. The savings, I think annually, looking at it compared to our system, will be almost the GDP of Uganda or something. Annually, the savings in the remittance markets. So it's really expensive, because Western Union and MoneyGram and all these intermediaries, they are highly involved. So our first users will be the one that is not as fortunate as my mom. My mother will start using it because Co-op and the businesses that Co-op work with are using it. So if Co-op can use it to pay Schulstel and do a lot of savings, Co-op will be incentivized to provide 5% back to MAMA users to receive it in a format that they're already conducting payments in. We like to use the phrase dumb money, smart money. So receiving digital payments will receive the money already in a smart money system that they can pay with already, or they can exchange it into analog money again. So to pay their bills with Schulstel. But if they could onboard Schulstel, then Schulstel and Ala could essentially Schulstel and Co-op could essentially conduct all their payments amongst themselves with no fees. And then looking at Pandora, who sells a bracelet for euro somewhere and then use that to pay for manufacturing in Thailand and import silver from India. All these cross-border payments and managing all this liquidity for a business is not only expensive and inefficient, it is also not safe, because having money in a lot of exotic currencies and a lot of exotic banks doesn't mean your funds are safe. But for someone like Pandora to say, okay, we'll buy e-krona, e-euros, e-dram, e-rupees, and e-whatever, well, you know that they're safe, because essentially you have digital cash placed in the central banks of each currencies. And the fact that you can move these around and exchange them at a much cheaper and convenient manner, that's a huge incentive for Pandora. And once the savings are what they're going to be, they will start marketing the Mama module onto the modular market in their stores. And they will say, get this and get 5% back, or get every 10 coffee for free or something. So the incentive will come from everybody else in the businesses. Does it make sense?
So take the macro perspective into this, about networks, right? So you know, it depends on how many parties you connect to your network, how much you keep the value inside your own network, so you create this more and more value. Now we have to remember that the existing networks are already there, so they are doing the same thing, and they already have the proliferation of fiat money in a way, and the card companies are widely accepted as well. Something that keeps on popping up here in the conversation, actually, was interesting, the model of M-Pesa in Kenya. And if you look at the kind of where that came from and where it is today, you can see a lot of these similarities with these e-money driven kind of initiatives in Europe as well, because M-Pesa started from airtime. It was basically people buying airtime, so basically minutes for your prepaid subscription on your phone. And then they started trading with that. But that was not regulated, it was not money, it was airtime, even though it was denominated in the local currencies, shillings. So the Safaricom decided that well, this is an interesting phenomenon, and it was driven by the fact that there's a lot of these agents all around Kenya, but no banks. I mean, there was no bank branches anywhere, and onboarding a customer is extremely expensive for a bank. So then Safaricom decided, with the help of IBM, that why don't we do this then? We allow actually cash in and cash out at the agents, and that was the start of M-Pesa and mobile money. Mobile money has then spread to other countries as well. I was working with deployments in 12 different African countries with mobile money. But the key there is the network and acceptance. So the reason why mobile money is so much used in these African countries is that if you go to Nairobi, you will see an M-Pesa agent on every corner of every block. And these people they're like people with a sunshade, a small metal box with cash, and a very basic Nokia phone with a USSD menu. And that's your bank. That's where you go and deposit, and that's where you get money out. So outside every bar in Kampala, for example, in Uganda, you will find a mobile money agent, so you can actually go and get cash, and then you can go into the bar and drink the cash, and then whatever is left you can deposit when you go out. And there's again, safety reasons. You don't want to carry around cash in a lot of these places, and then you're able to kind of create interesting services like insurances, investments, and savings around that.
So that part we didn't take with us here to Denmark when we got mobile pay.
So it's answering a need and creating acceptance and network. So that brings us around to where I started from, which is that it's the network effect of all the services you connect to your ecosystem, and that's what has been successful with the help of this great acceptance network in these mobile money countries. And the first question they had, by the way, after this kind of scale was reached, how do we send money to other operators? So then they created domestic interoperability schemes. So now you can send in Kenya, you can send money to other mobile money operators, and now you have East African hubs, so you can actually send money to other mobile money systems in different operators in different African countries. But there's no pan-African system yet. It's still emerging. So this interoperability layer is, the likes of Gates Foundation, for example, is working on it. So there's it's still coming, but on a local level, it's thriving. And that kind of again, if you took an earlier point of mine, which was that it's the bottom-up approach, again, that is needed. Winning. And I think that needs to happen here as well. When you're reinventing the way money works, for example, you need to understand that what is the bottom-up approach for you that will work. And I think that's based on local regulation.
That's a very nice. Do you want to add anything more as closing remarks? Because we are hitting 11 o'clock, so we're going to open the floor in just a few moments, but I'll just give you the opportunity. I thought it was very nice to say bottom-up, network, and acceptance. That is what it's all about.
Yeah, I don't think I can improve on that, so
okay.
I'll leave it there.